Portfolio Builder members, what a move in the markets. All of our portfolios hit the max profit on all trades this week. Our current trade on the SPY from yesterday is at a max profit. So I'm going to talk more about the topical content and market predictions for July and beyond, rather than look at the details of our profit loss. But all the trades are doing very well. Here's a look at the SPY poking into new all-time highs. TLT, this is the 1 day. Of course, this trades the 20-year treasuries. And to summarize, in our basic program, we're long SPY, which trades Monday, Wednesday, Friday. It would make a lot of sense right now to have half of your capital invested in our Thursday Trade Alert, which is the Whale Club members. And the cost to follow that is now significantly a lot less in terms of the cash you'd need to put into the program. Currently, this program's 100% on the TLT and short Alibaba. So that's a look at the TLT. My expectations for the TLT is that the trade war intensifies in the near future and sends TLT to 143 or higher. Longer the trade war goes on, I think the higher the TLT can continue to rise. In our basic program, we're hedging downside risk against the SPY ETF with FXI. So this is the Chinese ETF that I think is going to be in some serious trouble as the trade war intensifies in the near future. So we're taking covered call profits from the SPY. We're long the SPY, and we're protecting to the downside with primarily put options on FXI. So we'll be looking at this daily. Now, the other important put option we're purchasing in the Thursday trade alerts is put options on Alibaba. And if you go look at all the trouble they are in with slowing revenue growth, plus the big picture of sanctions on China most likely ahead, this one could really generate a nice profit. Now, we're not betting the farm on these put options. We're really just taking free money out of the option market and investing that into these relatively short expiration put options. And so the general idea is that these put options will expire worthless over and over and over again, and then suddenly they will really pay off and provide a good hedge against any short-term risks to our underlying assets. So we're not trying to get rich or bet the farm on any of these. Our Tuesday trade alert, this is basically taking what we're doing with the SPY, pulling out what I've identified as the best stock to do covered calls with in terms of the yield and the long-term safety of the underlying asset. So it's completely focused on Apple right now. And it puts you in a situation where you get a very high yield and purchase a put option on Apple to protect against the downside. So if we could have done this trade against Huawei, we would, but we can't, and Huawei's already taking some serious pain right now. Here's a daily view of Apple, the 1 month, the 5-year. And so it's because of this big drop and rally and then drop has created a lot of volatility, which jacks up the value of the options. So by taking on the position of Apple, puts us in a nice spot to generate consistent returns and buy a lot of downside protection week over week. So that's our Tuesday trade. Here is Bloomberg's summary of all the indexes. Shanghai up 2.3%. And so this is very typical of what countries do when they go into war. They lower rates, they print money, they flex all their muscles and try to look tough. Here's a look at the commodities market. Gold is breaking into highs it hasn't been at for quite some time. Our Tuesday trade will be trying to generate a little extra profit with reinvesting a portion of the credit we take from selling the covered call on Apple and buying call options on the GLD ETF. I was going to do it on Tuesday's alert, talked about it, decided not to, just wanted to make sure the Fed was really going to do what we all expected it to do, and it did. So as long as the trade war escalates, I believe the gold play will be a nice long-term trade for the next 6 to 12 months at least that we can play that. Yeah, here's the chart of gold. You can see breaking into 1358. Here's that 1 month view, just going straight up right now. We can see that the currency conversion rate of the US Chinese currency dipped back below 6.9, which is good, and a reaction to the Fed signaling that they'll lower rates. There's that 10-year yield dropping like a rock. Of course, that makes the TLT go up, and that's what we went completely long on today in the Thursday trade. 30-year yield falling like a rock as well. Cryptocurrencies continuing their ascent. We've been telling everyone to be long all year. And again, the second that this trade war is either going to get kicked down the road or resolved, I think we're going to see a sharp sell-off in these cryptocurrencies because we're going to see all the central banks want to raise their rates back higher once the coast looks like it's clear. So that's the big signal for when to start pulling profits out of this. The stock market would have you believe that they are ready for a deal, wouldn't they? However, the bond market, which is a far larger market than the stock market, and a little more smart money, you might say, is betting the exact opposite. So let's take a look at what's going on behind the scenes, why I believe a deal with China is unlikely. And sure, there's plenty of arguments. Trump needs to try to win an election in 13 months? In 16 months. So from that point of view, definitely playing with fire to escalate things. So that's why I think if he is going to escalate, it needs to be very soon. And so I think that we will have escalation by July, probably after July 4th. But we've been trying to start hedging against the downside risk well in advance of that, as you've seen. So let's just take a look at all the news clips I've collected. First of all, I was very interested in how China is structured because we know that China has made it cheap and easy to live in America for the last 30 years and for American corporations to grow rapidly and really let the Americans focus on things other than assembly. So what's it like in China? Well, what I found out was interesting. First of all, the employer has to pay around a 15 to 25% tax, which goes to the social insurance plan to the Chinese government. Plus, they have to pay around 15% of all the gross costs that you incur with hiring or spending money in China. And depending on the city, they have different rates. However, if you do work in one of their high-tech fields that they're focusing on, which has a lot to do with things like artificial intelligence, robotics, things to do with marine engineering, building roads, railways, anything of that nature. If you do create a representative office or a company that's domiciled in China, you can get your tax rate all the way down to 15% by focusing on those. And so China has this list of goals that they want to achieve by 2025. And so they're really incentivizing Chinese and the world to create companies in China and utilize their cheap labor. Now, the labor has to pay around 45% of their income to the government, plus pay some 20 to 25% to the social insurance plan, which covers, I believe, medical and housing. So your average Chinese guy is making maybe $2,000 a month in a tier 1 city and brings home $500 a month to keep. But I do believe that does provide him with all his medical insurance and perhaps even free housing to live in. I don't think it includes anything other than that. But I would say that the same work would cost at least 3 to 4 times that in America right now. Also, it's pretty common for these employees to be working 6 days a week, 10 hours a day. So you can see how China has some advantages here in that they take something around 75% of all the income from their citizens and then put it into the government pot. Then they use that pot to subsidize the sectors that they want to target, which they believe will be important in the future. And so you've got this basically the slave population who's working for super cheap to start off with. With what they do get paid, 75% of it's going to the government to support their housing bubble and to support the medical side of it. So let's look at some of these goals China has. One is to reach 800 billion yuan from being the biggest agricultural equipment maker, to produce advanced large-scale thermal hydronuclear power equipment, to become a group of leading semiconductor companies, self-sufficiency to 95% for international standards with providing advanced construction materials, namely to dominate the steel industry, to dominate in the medical devices field, start building what they're calling large aircraft engines, space information application development, and interplanetary exploration, turboprop airliners, develop their own intellectual property rather than utilizing others, relating to electric cars primarily, global railway, and to supply 40% of international maritime equipment, high-tech ship design and manufacturing equipment, next generation robots. And so you can see they have a very ambitious plan, and this says that for most of all, the plan has so far failed to get what China needs: core technologies that lie currently in the hands of U.S. companies. And here's a look at the countries that were most exposed to their Made in 25 initiative. And so South Korea, Germany, probably the two hottest on this heat chart. And this article reads, just how vulnerable China is to U.S. tech dominance became starkly clear in April when Washington slapped a 7-year ban on telecom equipment provider ZTE over a violation of U.S. sanctions on trading with Iran. The ban later dropped, threatened to put ZTE out of business and leave thousands without jobs. It set off alarms in China and increased calls to step up development of core technologies. From the point of view of the U.S., there are reasons to be wary of China's rise and its plan to forge ahead. Even as China struggles to build or acquire core technologies, the world's second largest economy has become the biggest market for e-commerce, mobile payments, and industrial robots, with 800 million internet users, twice the number of the U.S. China has also built tech giants, internet gaming and payment firm Tencent Holdings, drone maker DJI, and search engine firm Baidu, and e-commerce company Alibaba Group Holding. Article continues to read, the problematic aspect is how they go about doing it. The government heavily subsidizing development or discriminating against foreign companies or forcing technology transfers from foreign companies. These are elements of unfair competition and should be opposed. Here's a quick tweet from Jeffrey Gundlach, always looking out for anything from him. Fed message today was essentially the case for easing has strengthened. We hope that changes soon. If it doesn't, we're behind the curve. In other words, they've got a lot of cutting to do if this trade war escalates. So that would be potentially very bullish for the TLT and GLD, which we're playing in our Tuesday, Thursday trades. Retired General Robert Spalding is very anti anything with China. Had this tweet, if the U.S. business community gets its way, we probably will capitulate. And so the global corporation looks at China as a huge potential customer. So it has a different point of view than the individuals who live and work for these companies in the U.S. So that's the primary problem, and most likely what's holding this all together right now is all the connections and business dealings between the U.S. and China. This was comical. Huawei CEO Ren says he would be willing to speak with U.S. President Donald Trump. China is buying Iranian liquid petroleum gas despite sanctions, ship tracking shows. I don't know if this is really true or not, but what does seem to be relatively easy to verify is the sheer amount of organ transplants that are recorded officially and reported from China. And it's this huge amount, something like, I believe it was 60,000. However, there's only 20,000 people who had offered to donate their organs. So the big story on this is that if you need to get an organ, China can give it to you on demand, and that they are potentially taking advantage of their prisoners to be able to offer this and make a lot of money from it. So I don't know the truth of this, but it is popping up everywhere. I was looking at the tax rates for working in China. Obviously not very good. If you're a worker, you only get about 25% of your money. And of course, you can't say anything bad about that. Otherwise, you'll go to jail. And even if you did try to say something, it's automatically deleted from all digital media because they control the internet and the phone lines and everything in between. But however, if you do want to start a company and take advantage of their slave labor, they have a great deal for companies that's competitive relative to most of the world, especially if you jump into one of their high-tech sectors like we were talking about. And this was somewhat comical. Beijing has repeatedly denied such accusations and said it stopped using organs from executed prisoners way back in 2015. Headline in Fox, Chinese company at the forefront of the drone business. Now, I think one of the big themes that is going to perhaps become a forefront in the 2020 election is going to be China. Also, if it is Joe Biden running against him, they have a pretty clear cut with the China bank raising $1.5 billion for an investment fund that his son runs. But also I'm interested in what have other tech companies been doing in China. And so Google has an interesting story. If you go back, they're in China, they're out of China, they're in China. They created the system to allow the Chinese government to censor their huge audience. And so we get back to this world where the corporations, they don't care about where they make money. They just want to make the most money possible. And so we start making some perhaps ethical decisions. And so Google was in China. They took it out and they came back in recently. But you can see that they are blocking things about the Tiananmen Square massacre. And this little clip is interesting. In June, Google announced a $550 million investment into Chinese online retailer JD and unveiled plans to open a research center in China focused on artificial intelligence. Google now has more than 700 employees in China. For Google, China is an increasingly difficult market to navigate. The Chinese government has tightened internet censorship significantly since President Xi Jinping came into power 5 years ago. Companies need a great deal of resources to meet the censorship demands imposed by the government, and failing to do so can be serious. In fact, I've heard reports that they now have 1 million people censoring their internet. And this is a few screenshots from an IMF abstract. That's the International Monetary Fund. and it's only going to be a little clip of it, but they're essentially starting to evaluate the credit boom that China has undertaken. And the Chinese output growth after the global financial crisis was supported by booming credit. This credit boom carries risks. International experience suggests that China's credit growth is on a dangerous trajectory, with increasing risk of a disruptive adjustment and/or a market growth slowdown. Several China-specific factors, high savings, current account surplus, small external debt, and various policy buffers can help mitigate near-term risks of a disruptive adjustment and buy time to address risks. But if the risks are left unaddressed, these mitigating factors will likely not eliminate the eventual adjustment, but make the boom larger and last longer. Hence, decisive policy action is needed to deflate the credit boom safely. Well, how about U.S. sanctions every company related to China? So I think that the heat is just barely getting put on. U.S. had to come across as, hey, here's what we want, here it is. Give them plenty of time to react. But tomorrow I'll spend a lot more time going through the rest of this report and get into it. But the bottom line is China has a lot of weakness right now, and they've taken on an incredible amount of debt. So they're very at risk to being poked and popped, which is exactly what the American government is doing right now. So I'm going to skip through that and cover it in more detail tomorrow. China sounds alarm over bad loan surge. This is today. 18 big regional banks in China haven't filed their financials yet. Baosheng Bank authorities haircut interbank deposits and commercial deposits as much as 30%. Get ready for a banking crisis. This is Financial Times. China sounds alarm over bad loan surge. We've seen that short-term lending rate rocketing in June. Much higher interest rate to borrow. They're running out of cash. Why would Chinese depositors leave any money at all in regional banks when it's at risk of loss? Chinese property developers rush to sell bonds overseas at significantly higher costs. So the big problem they have is they have just continued to build all this real estate and pretty much force their people through the Social Security tax and through just what they've encouraged culturally and limited these Chinese to what they can even invest in. They've created this huge real estate bubble that can only continue as long as the prices continue to slowly rise. And so they've been doing that for some 40 years now. The prices have gone up extraordinarily, and now we're poking the bubble. So that's why I believe there's going to be much more pain ahead. America will get a far better deal out of China if they're just a little more patient. Part of the reason why Huawei has been so successful around the world is that they offer financing at 0% interest for 20 years. So you can get the phone for free, subsidized by communist China, and pay it off nice and slow. But now you have a phone that doesn't have an operating system soon because Android got pulled out of it. Here's a look at the social credit system. You start off at 100. If you do good, you can go up to 200. You do bad, you get kicked out of the city for good. And apparently in Shenzhen, it takes 5 traffic violations and you're out forever. Living in a world of fear. Xi told President Obama in the Rose Garden of the White House that China would never militarize the South China Sea islands he was building on coral reefs. Just another lie told by Xi to the U.S. Can Trump cut off Chinese companies from U.S. capital markets without damaging American capitalism? They are not being held to the same standards of transparency and accountability, especially concerning material risk that is required of U.S. companies. This is clearly unacceptable. Trump asked if U.S. will strike Iran, says you'll soon find out. Meanwhile, the Hong Kong protest remains. They did not get Carrie Lam to resign, and she has not removed the extradition bill. So that's pretty insane. 2 million people on the streets. If you go to Facebook, search Hong Kong protests, look at the videos. Some pretty cool videos will pop up. Huge demonstration. And so this must be infuriating China. So I believe the pain is just getting started for China right now. If Beijing has to choose between economic and political prerogatives, it will prioritize the latter. Beijing cares less than ever before about Hong Kong's international recognition as a separate jurisdiction. The leadership is far more obsessed with party control, and that's because it's becoming harder and harder for them to keep their population silent. It's becoming harder and harder for them to really just keep everyone in the dark and continue to operate as a slave nation. China set overnight lending rate SHIBOR at 1.25%, unusually low and consistent with serious banking stress. Last time it was set this low was in 2015, and before that during the throes of the great financial crisis in 2008 and 9. If you don't have your FXI puts, better get them. South China Sea satellite image shows Chinese fighter jets deployed to occupy island. CNN. Chinese Commerce Ministry, communist fellow leader, top Chinese and U.S. officials will hold trade talks following instructions from their leaders. Beijing hopes the U.S. would create necessary conditions for dialogue, aka drop the tariffs, listen to its industry, bought out by China, and stop threatening tariffs and waging a trade war. So, highly doubt that happens. Here's a big piece about Biden and his son. To summarize, the son went to Ukraine, sat on their board of directors, been pulling $1 million a year from that job with no expertise on anything to do with the company. And then in China, they did a deal with the Bank of China to have a fund that manages $1.5 billion, and no comment from the Bidens relative to that. U.S. Fed predicts lowering interest rates a total of 75 basis points in 2019, which could mean 25 basis points July, September, October. And that is a wrap for today's update. If you are on a basic membership and you're interested in making sure you never miss out on our Diamond or Whale Club trade alerts, we have a great deal. You can get your initial purchase refunded and upgrade to a lifetime membership for a one-time payment. So call Dean or Chris. Numbers are on the screen. They can answer all your questions, help you out, and get you savings. So you pay a one-time fee today, and you're in our program for life with all 3 programs. Now, if you are either on a free trial or an expired trial, you're no longer getting the trade alerts. The basic membership is going to rise to $2,000 a year. I highly suggest you call either Dean or Chris, get locked in for $897 a year. So you can get that basic program by Friday for a discounted rate and save for every year that you do remain subscribed. And if later on you do want to upgrade to the lifetime membership, we will discount what you pay entering into the program. So thank you guys for your time. Hope you enjoyed today's evening update. Tomorrow is our basic program trade alert on the SPY, long SPY, short FXI, getting ready for some volatility in the markets and some serious fireworks. So thanks again, and look for a new update tomorrow.